Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar and the brand new week. Traders, this video is being filmed on January 10th for trading January 11th. That would be Monday, 2010. As you know, when the weekends come, I get plenty of time to read through all the newspapers. And I gotta say, traders, once again, the news is not that bad that's out there. In fact, the news is promising that our markets will continue higher. At least the S&P and the U.S. stocks. We'll see what happens. In the newspapers this weekend, of course, unexpectedly, U.S. loses 85,000 jobs in December, right? But traders, compared to what we were used to for the last 2 years, we'll take only 85,000 and go, oh, thanks, that's all it was. So it's not as bad as it has been, which means the economy is improving. Robust temp hiring this month, however, suggests permanent job growth should return. That was in Investors Business Daily. The world's largest silicone chip maker, Taiwan Semiconductor, has seen sales more than double to $1 billion in December. $1 billion in semiconductors. And PC-related orders picked up as well. Another thing about the Asian part of the world, China, traders, has surpassed the U.S. as the world's biggest auto market. China, the world's biggest auto market. I've said this before. Get ready to learn how to use your chopsticks to eat food with, because we're all going to be Chinese sooner or later. The U.S. economy to strengthen. More articles I've read this weekend. And back to Investors Business Daily. Investors Business Daily this weekend reports a gauge of future U.S. economic growth rose to a 78-week high of 131.5 for the week ending Jan 1st. The previous level was 130.7, suggesting that the economy continues to improve. So traders, we are seeing improvement all over the place. We're not running out and creating brand new jobs right away. And yes, there are people out of work, but less and less people out of work. More and more people beginning to become hired. Things are getting better. Traders, last year, how many of you had a decent year in your 401ks? Many of you did, right? That makes people begin to relax. When they relax, they start to believe in the markets a little bit. All of this creates a bull market. Interesting note, Eurozone, a little bit of bad news, Eurozone sees jobless rate hits an 11-year high. This makes sense, traders, as when the recession started, Europe was still raising interest rates. If you remember, my video fans will remember me saying to you, traders, Europe is raising rates right now. We're at the top of a market. It's beginning to crack. The U.S. is lowering rates. Europe should not be raising rates. That is going to hurt them, and it's going to put them months and months behind the U.S. when we recover. And I did video after video about that, right? That was in 07, 08. Well, here we are now. Europe's economists sees the jobless rate continuing to tick higher until third quarter 2010. Well, you know what that tells me? That's almost exactly on time, traders, because as we started to lower rates here in the U.S. to attack the problem, Europe was raising rates because it was making the dollar get pounded and their euro currency was flying. But while they raised rates, they went into about 3 to 6 months further into recession than we did. They're about 3 to 6 months behind the U.S. That means if European economists see the jobless rate staying steady until Q3, well, that would make sense, right? That's about 6 months down the road. So I think this whole recovery is working out the way we were expecting. Good news. Separately, in the newspapers, of course, the Eurozone officially exited its recession in third quarter of 2009. So Europe is looking better. Yes, they're behind us, so they're not looking as rosy as we are. And the United States isn't looking great, but it is looking better, traders. Now in Europe, Germany, Europe's #1 economy, sees a surplus in its exports surging to a 17-month high. So the largest economy in Europe is doing better. That means Eurozone will end up doing better. Of course, the rippling effects take time. Back to the U.S., traders. Online job listings surged in December to 255,000 posted job openings on the internet, or at least possible positions if you ace the interview. That's 255,000 new jobs. If I remember right, there's usually about 65,000 new jobs posted. So that's a lot on the internet. Gad Lebanon, he's the Conference Board's senior economist, said the gap between the unemployed and the advertised vacancies, or those new positions on the web, is still very high. But the recent 6 months indicates that things are moving in the right direction. Traders, there's story after story in the news that is helpful towards a recovery here. Yes, there are some bad spots, but come on, let's face it, over the last 2 years it was bad, 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 a bright spot. Now it's bright spot, okay, bad spot. Things are changing. If the news is getting better and the economies are getting better, people's attitudes towards trading will get healthier and better. Now, something else we need to discuss is this. If commodities prices, here's a sector that we really need to keep our eyes on, the rise in commodities sector. At this point, the rise in the markets is a possible prelude to better days coming as companies begin to snap up materials and manufacture products, right? So the first part of the rise in commodities is not scary. However, if commodities prices continue to rally tremendously, then it will have a very negative impact on the worldwide recovery, as well as a devastating effect on the world's economies. Let's hope two things. Let's hope that the commodity sector's rallies are muted, and let's hope that oil never goes back to $150 a barrel again. Oil getting back above 120 is going to cripple this recovery. We don't need that, and we don't need the price of all the grains and the softs and the oils, and the metals, of course, to continue rising, because that will stifle our recovery. However, that's not where we are now, but as China and India continue to come online, traders, it's likely that these commodity supply-demand markets will continue to see increased buying pressure. So as a whole, I think the CRB and the commodity index will continue to go higher. If it doesn't go higher gangbusters, that will be okay. So let's see what happens. We will keep our eye on that. We are day traders, and we trade the commodity market, so hey, movement's movement, and that's good for us. All right, traders, next, what we have on the board, our flags are still flying all over the currency markets, something I showed you on Friday. And the U.S. indices technically are very bullish here, and they are looking good. Mikey, you want to say that louder?
Did you have a news article you wanted to show?
You know, I did. You know what? I did have a news article. I didn't bring it in with me, but if you want to grab it, how about we'll do this? After we do the chart segment, you bring that news article in for me, and I'll show it to the... I have... You know, I was going through the news today, and a picture pops up, going through Investors Business Daily, and I had to stand back for a moment. Then when I read what was under it, I said, I'm going to have to show this to the Omniac. So when we come back from the charts, I'll show you what I'm talking about. All right, so U.S. indices technically very bullish, giving us a green Omni for Monday. Traders, on Friday, I showed you some flags in the indices. Flags in the currencies. I showed you the difference between a bull and bear flag. And I said that the currency, euro currency, was in a bear flag while the dollar index was in a bull flag. And we didn't know if we'd break out of those flags Friday or not, but we know that we are in them and they are showing possible direction. Well, on Friday, we did not get out of the flags. We stayed within the flags and actually went to the upper and lower ends. So the dollar index is still in its bear flag, testing the support right now as we speak. And the euro currency is still in its bear flag, testing resistance as we speak. And I'll show you that in just a couple of moments. And I want to show you how very strong technically these U.S. indices look. So with no further ado, let's go to the charts. Okay, traders, the first chart you were looking at is the dollar index daily bar chart March contract. Very same chart you've seen in Friday's video, but we were right here in Friday's video and expecting possibly that it would take out the upside. Instead, traders, staying within the flag, it breaks down, and then this evening, Sunday, drops down, tests the bottom of the flag, and is now sitting right about here. So it stayed within the bull flag and continues to look bullish, but until it takes out either this line or that line, we are in the bull flag and indecisive. so we will not trade the dollar index or the euro currency Sunday night into Monday. Let's let it show us. I'm the type of trader that doesn't mind playing along once the market shows me what it wants to do, because I am not going to tell the market it's going here or here. It's going to tell me, and then I'm going to tell the Omniacs, let's trade. So dollar index stuck in limbo until it breaks out of the bull flag. Let's go look at the euro currency. Traders, euro currency before you. This is the March daily bar chart. Once again, now this is a bear flag opposite of that dollar index. In Friday's video, we were sitting down here testing the support of the bear flag, expecting a possible break. Instead, it ran up when the unemployment numbers came out at minus 85,000. It ran up and hit the top of this line as of Sunday evening, just like the dollar index hit the bottom line this evening. So resistance being tested in the flag with euro currency. And then when we look at that bear flag, or I should say the bull flag, we have support being tested in the dollar index. So interesting right here, resistance being tested in euro, support being tested in dollar. That's a stand aside day. Let them give us direction, then we'll play those ponies. So for now, we'll keep an eye on the formation and allow it to develop before we get into a position. Now, traders, I'd like to discuss the U.S. indices and how technically bullish they seem to appear when you look at charts and indicators. Let's go take a look at those charts now. Traders, a very familiar chart to you by now if you've been following along with these videos. This is the Dow Jones Transportation Average Daily Bar Chart. You've seen me show this to you many times, how we put the triple top in or made the plateau, broke out, did another one, triple top number 2, made a plateau, broke out, did another one. Each time it broke out into a parallel channel. Well, here we are, traders. Repetitive patterns are the anchor of technical analysis. This worked, and now this one has worked. We are in a bullish parallel trend coming out of that third triple top, and it looks to me like this market is poised to move much higher during this first quarter. We are day traders, so we expect it to move higher on Sunday into Monday. Until Monday's close, we're expecting higher and maybe past that, but we're day traders, so we'll take one day at a time. But that looks bullish. The leader of the U.S. indices, the transportation average, above its third formation. That looks just like the two before it and beginning to break out within a bullish parallel channel. That, my friends, is not a picture of bearishness. That's a picture of continued strength and most likely a rally continuing for this quarter. Let's look at more charts here. Okay, traders, when I mentioned repetitive patterns, what you look for in technical analysis is, has this happened before and is it working once again? This is the NASDAQ daily bar chart in a very smart parallel channel. What I was just referring to is this is what was considered resistance. We hit it and dropped and hit it and dropped and hit it and dropped. Well, we've gotten above it since. We've hit it and rallied and hit it and rallied and hit it and rallied, and we are here right now. NASDAQ, secondary leader supposedly of the U.S. indices. What was resistance, now support, holding well and rallying out of it, putting its sights on getting to the top of this channel trend. That is the way we've been running in the NASDAQ since this recovery began. Why not continue? So NASDAQ looking bullish, as did the transportation average. So our leaders, no doubt, are looking bullish. Now, a third leader, and you've heard me mention this to you many times before, is the mini Russell, right? Let's go look at that chart now. Traders, the mini Russell, look at this chart. Had a bull flag, something we've shown to you in a video I don't know how long ago, probably something I've shown in my live classes at the site. Started out with this bull flag back in October. Since that bull flag, it has broken out into a very, very strong parallel channel. Resistance, hits it, drops to support, hits the resistance, drops to support, still on the support, heading towards the resistance. That, my friends, is quite bullish. Three leaders of U.S. indices all pointing towards a very happy January. Let's see if it continues. I find that bullish. Now, traders, of course, we want to go look at the S&P, so let's take a look at that. Okay, traders, the E-mini S&P daily bar chart, the March 10 contract, and boy, oh boy, look at this rock and roll. What was major resistance for quite some time has now become major support. What was resistance is now support in a parallel channel pointing straight up. The S&P looks good. Not only was the resistance tested but the same day it was tested, so was this parallel channel. Right here, we put in a low, traders. Parallel channel meets what was resistance, now support. That's a low on a day a week ago, and the market rallied out and has since created this parallel channel. And that looks strong, traders. Was resistance, now support. Away we go, off to the races, if you ask me. And finally, traders, while we're looking at bar charts, we have the Dow Jones daily bar chart. It's the Dow Jones Industrial Average. And once again, traders, what was resistance bounced, failed, hit it, failed, hit it, failed. Got above it finally, came down, tested it, and have been holding it very smartly now, rallying above it inside of a parallel channel. I think that the Dow Jones Industrial Average looks really good right here, and it's probably going to pop out of this little wedge that's been building, and it's probably going to move much higher. So, you've seen these charts. They look really good. Now, I would just like to show you the indicators, because there are, of course, indicators on these indice markets, and the indicators basically look the same from the Dow Jones straight through the NASDAQ, the Russell, S&P. They all look basically the same, and I'll show you that picture now. Okay, traders, we are looking at two separate indicators here. These are indicators on the U.S. indice markets. At this point, it almost doesn't matter. Transportation, industrial, NASDAQ, S&P, Russell, they all basically look just like this. RSI, or Relative Strength Index, pointing straight up, as are the other indicators that you would look at to gauge market movement in the S&P or market direction. Then up here we have Commodity Channel Index pointing straight up. Traders, I'm not going to waste any more of your time and show you 10 more indicators, but I assure you that just about every indicator you look at will be pointing up for Monday's trading session. Pull your charts, traders, pull your indicators, take a look at your support resistance, look at your flags, and get ready to watch the dollar-euro combo break out one way or the other. Keep an eye on that because it's important. So, traders, you see those charts? Let me tell you something. Those indices look very good right now. Unless something insane happens, that's a bullish look, traders. Forget about what you think. Trade what you see. In those flags, you seen the bull and bear flags. Bull flag dollar, bear flag euro currency. Once we're out of those formations, traders, then direction will be set for a while, and we'll know which way we want to trade those. So I think tomorrow will likely be an important day, unless, of course, we stay inside those flags for a few more days. However long it takes to create the flag is that much further it will go when it breaks out, so be it if we stay in this range for a few days. Let's see what happens with that. Now, traders, just a moment ago, I was alluding to you about an article as I was reading through the newspapers. And I said, boy, I saw a picture in the papers, and I looked at it and thought, oh my goodness, I have to show this to my Omniacs. It's meaningless, but I think you'll find it interesting. In China, Walmart, or Sam's Club, I should say, has catered to the southern Chinese tastes by offering this. When you walk into a Chinese Walmart, you can buy a crocodile. Take it home, make some dinner for it. So imagine that, traders. You can have one of those right there on your table. All you have to do is go shopping at Walmart in China. All right, enough of that. I just thought that it was kind of interesting to see crocodiles or alligators lined up right there where you can buy other meats. Go China. All right, traders. So, again, you've seen the charts. You see what we're looking at. Remember this at all times. No one ever knows for sure if technical analysis is going to pass or fail the next day when you do it. I can tell you this, and I've proved this in hundreds and hundreds of videos, 533 so far, is that analysis is more accurate than any other form of market directing than I've ever found in my life. I can't figure out where a market's going to go using any other form of analysis like I can figure it out using technical analysis. And I know that's the same for you, because I'm 27, 28 years deep into this, traders. I've tried everything, from neural networking to point and figure to Stottlemyre. I am telling you, I have tried everything. When you cut this down to simple, raw, technical analysis, you find the roadmap, and we are here to teach that to you. If you'd like to learn that from us, simply come on down to our site. It's www.livewithoscar.com. Jump into the free chat rooms. Don't trade alone, traders. Come join us. There's an army of Omniacs from all over this planet. We get together every day. We huddle in our chat rooms, and we fight our way through these rough and tumble markets. Traders, listen, a stop is your best friend, no matter what recommendation you come up with or take from someone else. A stop is your best friend. Never trade without stops. And of course, never take anyone's recommendation without doing your own homework. Because the bottom line is this: when you hit the buy-sell button, it is your decision, not what some guy told you to do. Your decision, live with it, good or bad, so do your homework before you trade. All right, traders, that's about it. Sunday night, I want to get out there, study more markets, get into my chat rooms. Give me a call anytime day or night, 702-629-4755. And as always, keep your emotions out of trading. And one of the best things you can do to help yourselves keep your emotions out of trading is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Subs are in! Emotions are out! Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.